Guys, this has been a crazy start to 2025. We're sitting here and we're used to bull market to bull market. In fact, 2024 was the second year in a row of over a 20% gain in the S&P. And what led everything? The Magnificent Seven. These seven stocks have absolutely dominated. But this is the start to the year. Guys, only one stock is in the positive of the Mag 7. That's Meta this year. Isn't that incredible? The S&P is up 1.4%. The NASDAQ is down, barely down 0.6%, but it started off down right now. Now, guys, if you look at the start of the year, though, started off a little bit different. Now, this is a very complicated chart. It's got a lot of, stocks in here, but here are the values right here. This is as of yesterday. So doesn't involve today's returns. Guys, I've said on this channel and our main channel many, many times, the stocks that lead the way up, that perceived to be overvalued, are going to lead on the way down. I've said the NASDAQ is going to perform much poorer than the S&P in the forthcoming years. In fact, I created a video just last week on our main channel where I picked my own Magnificent Seven and said, I'm going to compare these from the start of the year going forward, and we're going to update everybody quarterly because I believe that my 7 picks will grossly outperform the other Magnificent Seven over the coming several years. So make sure you check out that one. Today, not a big day for earnings. This week, we have a few companies earning, one of which I own called Target. I don't know if you've heard of it. Remember, don't buy a company just because I or anybody in the world has it, even Warren Buffett, because he buys it for his reasons that make sense. We are trying to teach people how to fish here. We're not just trying to hand you fish so you can eat. And guys, we still sit at record high valuations. Here is the stock market to GDP ratio. We're currently at 111%. This is after actually the market fell last week. I know it's kind of hard to believe, but the market did fall last week, even though it's still up for the year. And guys, you look at 50% or more overvalued in history going back to 1929. The following 10-year returns, not including dividends, was average minus 0.9%. And guys, we're at 111%. So you can just imagine, I believe the next 5 or 10 years are not going to be pretty in the market. And of course, we hear the conversations every single week. Now, why do I repeat these things over and over? Well, guys, I've truly learned that in order to be successful at anything you do, you got to stick with the basics. Just like Steph Curry, when he starts to shoot, if you don't know who Steph Curry is, come out from underneath the rock. The best shooter in NBA history. He shoots threes amazingly. And guys, guess what? When he starts warming up, you know what he does? He goes to the 3-foot mark and he just hits 3-foot shots. Then he takes a step back, does some more. He starts with the basics. I repeat these things over and over in my head. I repeat these mantras because I truly believe that to be successful doesn't require some crazy kind of thinking. It requires sticking to the things that make sense. Every investment is the present value of all future cash flow. A great story can become a bad investment if you pay the wrong price. Those are 2 pillars of our principle-driven investing. Now, when it comes to the 10-year earnings of the S&P, we're 118% overvalued. So even worse when it doesn't even matter where the earnings were delivered. So guys, those Mag 7 stocks, I talk about overvaluation. Let's just check out how overvalued they may or may not be. Let's stick with the one that gets the most attention. Now the number 2 market cap in the world, Nvidia. It's down another 4.5% today. Now, our stock analyzer tool, this is where we put the story and the numbers together. Because guys, if anybody here doesn't think the story on Nvidia isn't incredible, what are you doing? It's an incredible business, great balance sheet, great company, top quality, been dominating for decades. That's the great story. Now we got to make sure the numbers make sense. Because if you're just buying on the story, you're going to have a lot of problems. Air traffic, airlines changed the world, cars changed the world. And since 1900, both of these investments have proved to be absolutely terrible for investors. In fact, in the auto industry, more money has been lost than made in the auto industry since 1900. Even though how many people in the world have cars? How much has the car business grown since 1900? Guys, it's pretty obvious. Internet. Back in 2000, 99% of these internet companies went bankrupt. Did the internet change the world? Absolutely. That's something to consider here. So let's pull up Nvidia here. The last time I did Nvidia, and guys, I did 10, 20, and 30% revenue growth. For those of you who don't think that's a lot over 10 years, that's a ton. That's a ton of revenue growth. And they have the potential to do that. I don't think it's very likely, but it is potential there. Remember, we're here to figure out what is probable, not what's possible, what is probable. but I'm being optimistic in all these valuations here. 30, 40, 50% profit margin and free cash flow margin, 20, 25, and 30 times earnings and free cash flow. That's a big number. Do they deserve it? I mean, this return on capital, which shows a moat, says it deserves it. But will that be the case forever? I scroll down here, and guys, on the middle assumptions, yeah, makes a lot of sense, 13%. The question is, how likely are those middle assumptions? I had to go to 20% revenue growth for 10 years to get there. That would mean that their revenue goes up 6x from today. That's what 20% revenue growth over the next 10 years means. So is that possible? Sure. Is it probable? That's the question. Okay, let's pull up Tesla. That one's fallen precipitously in the last month or so. In the last month, it's down 23%. Year to date, it's down 24%. Okay, so let's pull up Stock Analyzer tool on Tesla. Guys, I did 15% revenue growth on Tesla. That's big numbers right there. Profit margin, 18%. Guys, name me a car company with 18% profit margin. There's one that has 20%. You know what it's called? It's called Ferrari. And you know what they have? They have a gross margin of 50%. That means for every car they sell, 50% is profit. What's the gross margin on Tesla? 18%. Guys, I'm giving them profit margin where their gross margin is. I'm assuming that all the software is incredibly profitable. They kill it on everything. They kill it on everything. They absolutely smoke everything. And guys, let's hit the analyze button. This is where it's hard for me. Middle price of 238, low price of 90, high price of 535. To get a bottom line profit margin, a little bit under Ferrari, where the vast majority of the revenue comes from the automakers. That's tough. Now, let's go find a company like Google, which I think is one of the more reasonably priced companies in the Mag 7. And it's fallen quite a bit lately, hit an all-time high of close to 200 or 200. Now it's at 171. I made reasonable assumptions on Google. Look at my reasonable assumptions here. 4, 8, and 12% revenue growth, profit margins in the low to mid 20s. Same with the multiple, because I believe they deserve a premium because of their growing return on capital, which means they invest money at high rates of return, and the top 2 search engines in the world, Google.com and YouTube.com, they own both of them. 171, guys, look at this. This to me seems like a better buy. This is probably one of the more reasonably priced companies in the Magnificent Seven. So that's what we're here to do. We're here to teach that process of story and numbers being put together. There's only 3 companies in the Mag 7, and they're pretty interesting. But if you're able to understand this, I understand that lately it seems like markets can't go down. I get it. We've had this bull market run that's been absolutely incredible. But if you look at history, every time that happens and we get to valuations of this level, spoiler alert, we never get to valuations of this level. It is absurd out there. But who knows what the future holds? If we keep printing money like this, might be okay for the market. I have no idea. So guys, pay attention to this channel. We do a lot of earnings releases throughout the week. We do reports on CPI and other things like that. And guys, if you want to be around principle-driven investors who all talk about the same things in the same way, and guess what? There are people out there who love Tesla and crypto in our community. Join our community. You can use all these tools and everything. It's a great way, but the big thing is we want people who want to learn. I don't want people who are just looking for a handout. If you want a handout, go to the government, get on welfare. That's for you. If you want to be self-sufficient and be able to make your own decisions and bounce ideas off people, that's the community. That's what we're here for. If you made it this far in the video, you're probably somebody who should be considering the community. So go check it out at everythingmoney.com/signup or click the link in the description below. Thank you for your time.